If you're considering starting a new business venture in the UK, one of the first decisions you'll need to make is what type of business structure to use. Two of the most common options are a limited liability partnership, LP, or a private limited company. But which one is right for your business? That's what we'll explore in this video. We'll dive deep into the pros and cons of each structure to help you make the best choice for your specific situation. So grab a pen and paper and let's get started. And don't forget to like this video and subscribe to the channel for more awesome business tips. Before we compare LLPs and private limited companies, let's quickly define what each structure actually is. A limited liability partnership, or LLP, is a type of business partnership that provides limited liability protection to its members or partners. This means the personal assets of the partners are protected if the business runs into debt or is sued. On the other hand, let's define PVT LTD. A private limited company is a separate legal entity owned by shareholders. The company's finances are separate and distinct from the owner's personal assets, again providing liability protection. So in essence, both structures limit the personal financial exposure and risk of the owners. But there are some key differences between the two, as we'll discuss. The first big difference is the tax implications. One of the biggest factors for many entrepreneurs is how each structure is taxed. This is a key area where LLPs and private limited companies differ significantly. With an LLP, there is no corporate level tax. Income from business operations passes through to the individual partners, who then pay personal income tax on their share of the profits, based on their individual tax situation. Let's compare this to a private limited company which pays corporation tax on its profits at the corporate level, currently 19%, but set to rise to 25% by 2023. Shareholders of the company can then receive dividends from after-tax profits, which are further taxed at personal income tax rates. So in an LLP, there is no double layer of taxation at the corporate and personal levels. This can make LLPs more tax efficient, especially for higher earning partners who may face higher marginal tax rates. Moving on is their administration and compliance. While tax is a big consideration, it's one of many factors when choosing a business structure. You'll also want to consider administrative requirements and other compliance obligations. Private limited companies face more stringent reporting requirements to Companies House and HMRC than LLPs. They must maintain statutory books, file annual accounts, and submit corporation tax returns, among other compliance duties. LLPs have slightly lower administrative burdens. They must still file annual accounts, but don't need to hold annual general meetings or file corporation tax returns. Record-keeping requirements are also more flexible for LLPs. So if you want to minimize admin and compliance overhead, an LLP may be preferable, especially for smaller businesses. Another point of discussion is management and control. The way each structure is owned and controlled also differs between LLPs and private limited companies. In an LLP, the individual partners own the business based on their capital contribution and profit-sharing arrangement laid out in the partnership agreement. There is no overarching central management or board of directors. Major decisions require approval from all or a majority of partners. Private limited companies have a more rigid structure, with a board of directors appointed by the shareholders to oversee operations. Share ownership dictates the degree of control, with majority shareholders having more voting power. If you want a more flexible, decentralized management approach, an LLP could be a good fit. But if you desire a more formal management hierarchy and division between ownership and control, a private limited company structure may be better aligned. Also, you should consider capital. Another key consideration, especially for growth-oriented businesses, is how each structure facilitates raising capital from outside investors. For many professional investors like venture capitalists, the private limited company structure is strongly preferred. Issuing new shares to investors is a straightforward and widely accepted path for institutional investment in private companies. With an LLP, bringing in new partners and restructuring profit-sharing agreements can be more complex from a legal and tax perspective. As a result, professional investors tend to favor investing in limited companies over LLPs. So if you foresee a need for major capital investment from angel investors, VCs, or other institutional sources, the private limited company route is usually advised. Lastly, let's look at perception and credibility. Finally, you may also want to consider perception and how each business structure is viewed, especially by potential customers, partners, lenders, and investors. In general, the term limited company carries more brand credibility, longevity, and sense of professionalism for many people compared to hearing a business described as a partnership. That's not to say LLPs are unprofessional by any means. But fair or not, private limited companies are often perceived as more robust and established business entities, especially for B2B companies working with larger corporate clients. So that perceived credibility could be a factor, at least from a marketing and branding perspective, when deciding between an LLP and a private limited company. At this point, I believe you have a much better understanding of the key similarities and differences between LLPs and private limited companies for your UK business. To quickly recap, some potential advantages of an LLP include: it allows a simpler tax situation by avoiding double taxation, lower admin and compliance burdens, more flexible management structure, potentially less credibility, branding concerns for some business types. On the other hand, a private limited company may be preferable if you require major outside investment, you want a more formal management hierarchy. Credibility, brand perception is very important. You expect profits to be lower due to the double taxation impact. So those are the major pros and cons to weigh. Of course, every business situation is unique, so make sure to get professional legal and tax advice before incorporating to ensure you choose the right structure. If navigating all these options still seems daunting, let First Formations Company do the work for you. They'll handle all the paperwork seamlessly to incorporate your new UK limited company. Check out their website link in the description to learn more. I hope this breakdown gave you helpful clarity on whether an LLP or private limited company is the better path for your new UK business venture. If you have any other questions, drop them in the comments. And if you found this video useful, smash that like button and subscribe so you don't miss future videos breaking down complex business topics. Thanks for watching and best of luck with your new venture.